Wednesday, October 3rd, 2018, Monaco 64, home of alternative economics and contrarian views. So Mayor Amschel Rothschild must be smiling in his grave today. And why do I say that? Well, it looks like Italy is back down. The Italian government has backed down to the markets and the bankers. And I'll talk about that in a while after I look at the markets. I also want to look at this book here, Mervyn King, by Mervyn King, The End of Alchemy. He's the former governor of the Bank of England. He was the Bank of England governor from 2003 to 2013. So during the crisis, he was at the helm. And he talks about some interesting reforms. And of course, he's talked about this and written about this after he left and after he got his pension. So touch upon that. Look at the markets, of course, in a minute. Before that, I'd like to thank again all the new subscribers, existing subscribers, for all the support, all the donations. And also, I've expanded a little bit that I'm endorsing goldinvestments.co.uk. You've got a promo code Monaco64 if you're looking to buy gold bullion or silver bullion in the UK. They ship abroad as well, but probably not as cheap as if you bought it from your home bullion dealer. So it's 8:03 a.m. This morning in London. So let's have a look at what the markets are doing. Start with gold. Gold and silver did fairly well yesterday. Gold got back up above 1200, got up to a high of around 1208, and then towards the end of the day it just drifted lower. I noticed as well the stock market was down pre-open in the US. We got down as low as minus 130 points in the Dow, but then the US came in, regular hours started trading in the US, and guess what? The Dow was unchanged, and the Dow finished up over 100 points. Go figure, even though the S&P and the NASDAQ were lower. Well, you know, these markets are manipulated. They are controlled by the government. We don't have a free market anywhere, really. You can thank maybe FDR in 1933-34. He started the Exchange Stabilization Fund. Well, that's a euphemism for market manipulation fund, isn't it? Exchange stabilization. And then you had President Reagan, you know, after the crash of '87. They created the Working Group on Financial Markets. And it's been getting worse and worse ever since. So with what happened in Italy yesterday, the Dow should not have rebounded. Even at the end of the day, European day, the spread between Italy and Germany was at its highest it's been in 4 years. It was at 303. The Italian 10-year yield was at 345, which is the highest in 4 years. And yet the Dow managed to finish up with all these problems, you know, that are out there. So continuing with the markets, silver at 1474, so that's up 6 cents, up 0.5%. I'm looking at the gold silver ratio. It looks like it's consolidating here a little bit. You can see by this chart, it's forming like a little flag on the way down. I think it's going to go lower. So technically, it looks like precious metals are going to continue to do well. That's my feeling. The key levels to break, I think, are $15 in silver. Not only because it's a round number, but it's a technical resistance. And in gold is, I would say, around 12 and 12.13. If we were able to break above that level and close above that level later on today, it would be very positive for the precious metals as a whole. So the Dow continued to go up, of course. It's up 66 this morning at 26,850. The Dow futures, S&P, they've managed to get it up as well here. It's up 6 points, even though it was down yesterday. It's at 29.29. And the NASDAQ future as well, they've managed to eke out a little, positivity into it. It's up 13 points, 76.39. So the currencies have rebounded against the dollar today a little bit. Pound is up 0.17%, exactly 130. The euro's rebounded 0.25% at 115.77. The dollar yen is continued, fairly strong. Dollar's up 0.15%, 113.81, and the dollar's down nominally against the yuan at 688. Oil prices, of course, are continuing to stay very strong. I think the markets are very complacent not to worry about that. Especially the stock market doesn't seem to give a hoot about oil prices. But WTI is still above 75. It's up a third this morning at 75.37. Brent crude 85, up 1/3% as well. So the 10-year yield, U.S. 10-year yield, right now is at 307. So it looks like the bond vigilantes are much, and for bond vigilantes, I would say the bankers actually, and the central bank, the ECB, they're different kind of bond vigilantes. In the 80s and 90s, the bond vigilantes were the market. Nowadays, the bond vigilantes are the central bankers trying to tell countries what to do. So there is a difference between the European bond vigilantes. It's the ECB, Goldman Sachs, club, so to speak. So what's happened to Italy this morning? Well, as I said, the Italian 10-year yield yesterday closed at 345, which was right on the cusp. Well, it was 4-year highs, and it didn't look very good at all. And this morning, I look at the yield, it's dropped by 13 basis points. It's at 332. So what's improved overnight? Well, it looks like the Italian government is kind of back down. They were going to keep the budget deficit to GDP at 2.4% for 19, 20, and 2021. And now, though, they're backing down and saying that it's going to stay at 2.4 for 2019, but it will drop to 2.2 in 2020 and 2% in 2021. And the market seems to think that that will, satisfy the EU and the markets and the central bank. So that's why the Italian bond yield has dropped 13 basis points at 332. But I think, though, if it was a really complete back down in the market and the central bank and the EU were happy with this, we would be a lot lower than 332. So I don't think we're out of the woods yet. Why is Mayor Amschel Rothschild smiling in his grave? Well, because it just goes to show that under a fiat money system controlled by the central banks and the commercial or private interests, the system, the economy becomes dependent on the bankers. We've had years and years of financialization. The debt has grown so much. The bankers have been allowed to issue debt out of thin air, fractional reserve it. They've even been able to issue this debt on the back of the taxpayer, so it's a perverse system where the bankers are able to back the debt that they issue out of thin air from your labor and your capital, and then lend it back to you at interest. And the politicians play along with it because they like, all the welfare state, big government. And that's why, even though I think it is incumbent on the government and politicians and the system to, how can I say, bring legislation to stop fractional reserve banking. I also don't think it's the right thing for nations or governments to be able to issue interest-free money themselves. We'd be deluding ourselves if we could get together and say we're going to issue debt-free, interest-free money out of thin air. Oh, that will be okay. But when the bankers do it, it's not okay. Yeah, I think it's that we'd be going down a slippery slope by doing that. What I think we should have is the abolition of fractional reserve banking, make it illegal, the abolition of legal tender laws, and just a free market in money. Money is just another commodity in the market. I don't believe in the collectivist mindset that governments, should be able to issue debt-free money for the people. I think it's just another delusion, in my opinion. So what about Mervyn King, former governor of the Bank of England? Mervyn King book, I think it came out a couple of years ago, The End of Alchemy, Money, Banking, and the Future of the Global Economy. Well, one of the most interesting sections in this book, and I'll put the link to this book below in the description if you are interested. An Amazon link if you want to buy it. Here it is. So I'll read from page 261 under More Radical Reforms. So I'll quote here. Frenetic activity among the official community cannot conceal the fact that although much useful repair to the fabric of regulation has been made, nothing fundamental has changed. He's talking about the banking system, monetary system. The alchemy of our banking system remains. Alchemy. That doesn't sound, very positive. Since the bank bailouts in most advanced nations were huge, it is surprising that more has not been done since the crisis to address the fundamental problem. Yeah, and it still hasn't been addressed, since he wrote this book a couple of years ago. The scale of central bank lending to a relatively small number of financial institutions was so large that one could have paraphrased Winston Churchill by saying that never in the field of financial endeavor had so much been owed by so few to so many, with so little radical reform. So yeah, he's saying then, the taxpayer bailed out all the bankers and they benefited from it and the general public hasn't. Of course, governments, financial regulators, and central banks are all well aware of the nature of the problem, but official efforts to tackle it are in stark contrast with more radical ideas proposed, albeit never implemented, by earlier generations of economists. And he goes on to say, well, basically saying, the financial lobby, they're the only people now who have the control of the money. They have all the money, almost all the wealth. They can buy anyone they want. Hence, Mayor Amschel's quote about "let me control, the issuance of the money, and I care not who makes the laws." So he goes on to say, even though the degree of alchemy of the banking system was much less 50 or more years ago than it is today, it is interesting that many of the most distinguished economists of the first half of the 20th century believed in forcing banks to hold sufficient liquid assets as reserves to back 100% of their deposits. Well, that is abolishing fractional reserve. And he says it's ironic that even though nowadays the debt has gone through the roof, there's a lot less economists calling for this. All these guys, Keynesians, who calling for a cashless society, they don't talk about this. They want to perpetuate this, system that is unsustainable, unfair, and creates inequality. What does he go on to say? They recommended ending the system of fractional reserve banking, under which banks create deposits to create deposits. He should have put create deposits out of thin air. Create deposits to finance risky lending and so have insufficient safe cash reserves to back their deposits. The elimination of fractional reserve banking was a proposal put forward in 1933 as the Chicago Plan. The proponents of the plan included the brilliant American monetary theorist Irving Fisher and a distinguished group of economists at Chicago, such as Frank Knight, Henry Simons, and Paul Douglas. Later support came from right across the spectrum of post-war economies, ranging from Milton Friedman to James Tobin and Hyman Minsky. Interestingly, he goes on to say, John Maynard Keynes was not part of this group, largely because Britain did not experience a banking crisis in the 1930s, and his focus was on restoring output and employment. So it's interesting because I touched upon a German economist in 1919 who was talking about this, that interest, being able to charge interest on loans created out of thin air was a huge problem, was the scourge of the capitalist system as it was then. And he wasn't even against capitalism. He was against this kind of fractional reserve banking. This guy I spoke about, Gottfried Feder, he wrote this in 1919, and in 1933 they were talking about it as well. That's what we need to do, abolish fractional reserve. But as Mervyn King said, there is no political will. The bankers, unfortunately for now, are under control, and Italians are finding out the hard way. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, BitTube, and on Twitter. I'll talk to you later. Take care. Bye.